This program is brought to you by First National Bank of Botswana.
FNB, how can we help you?
Good evening and a very warm welcome to First Issues. Last Thursday, members of the financial services industry, the media and more converged to hear First National Bank of Botswana's half-year financial results along with their dividend announcements.
I think in terms of what stood out is the sustainable growth from the bank. In the last 2 years, we've seen under very tough market conditions, the bank continue to excel where some of our peers have been struggling. The strategy of the bank to try and minimize or move away from, I would say, our traditional banking system where you walk into a bank and queue up for 2 hours before you have access to any of the services that you need. Moving from brick and mortar to the click system, as they've said. And the benefit thereof, both for the bank, because there is income generated through providing these online or electronic payment and financial services.
From where I'm sitting, I think it's a good set of results, considering the fact that they are operating in a very tough market environment, which is coming from the competition, where those in the same industry are coming up with those services and those products that were before only offered by FNB, and now everybody's seeing that there's market and there's an opportunity for them to make money for themselves. And this doesn't only end with the banking companies, but we're also seeing it coming from your telecommunication companies as well, who are offering money and money transfer services and the like.
The market is still tough for the banking fraternity, what with consumers under financial pressure, struggling to service their loans, let alone spend or save. For a consumer-led economy such as that of Botswana, where household expenditure stood at 49.1% of GDP in the third quarter of 2018, the effects are more significant. The Bank of Botswana continues to monitor inflation and support monetary growth and is expected to keep the bank rate at 5% in 2019. Despite this, FNB Botswana has managed to generate a 9% increase in profit after tax, a 10% increase in non-interest income, an increase in deposits, and announce an increase in dividends to its shareholders. Clearly, the bank is back on its positive trajectory based on results from these recent years. Join us as we first sit down with the Chief Executive Officer of the bank, Stephen Bogatsu, to find out how this was achieved and learn what new offerings you, the viewer, can anticipate from the bank in the months to come. Competition continues to grow with a lot of competitors adopting strategies or products that FNB has had and more entrance into the market. Yet FNB continues to have strong dominance and enviable profitability. What do you attribute your success to?
So when we started this journey a couple of years ago, we indicated that there are about four pillars that will be driving the strategy of the bank. And we did that cognizant of the fact that the environment then and for the next 4 years up to 2020 was not an environment that was conducive to lending. So without very good lending opportunities, what are the sort of things that we can do in order to continue extracting value for our shareholders? We indicated at the time that one of the most important pillars that we will be focusing on is a pillar that we call extraction of value from current, which basically means we will be reviewing our processes to make sure that we are efficient. So to that extent, we have centralized our processes. We are busy automating many of them. We also indicated as a result of that centralization and review of our processes, we expect that our costs will grow at a much lower rate than has been the case in the past. We also indicated at the time that there are lots of solutions that we want to provide to our customers in order to ensure that we provide banking 24/7 and we lower the cost per unit of provision of service to our customers. So all those initiatives gave rise to lower costs, to improved non-interest revenue, which at the end of the day improved our profitability.
Speaking of automation, when the bank first introduced its bricks to clicks, we can assume that there was some hesitation with regards to the general public or your retail sector when it came to adopting these newer methods of interacting with the bank. But now at 92% of your transactional volumes, I'm sure that is a figure you're pretty pleased with as a major contributor to your non-interest income.
Yes, that is true. We divide our customers into segments and sub-segments. Now we know exactly what solution we need to provide for every sub-segment in order to ensure that we are successful with our bricks to clicks strategy and migration. For instance, if you look at the sub-segment that we call smart, we ensure that they are enabled to have cell phones, and we encourage or put in place mechanisms to enable them to migrate to using their cell phones for transactions. Then there are other segments that would normally have other devices that will enable them to do their transactions online. So it's very important that you identify which sub-segment you are looking at and what solution you are providing that is very relevant for that sub-segment. At 92%, it's pleasing because it has migrated a lot of our customers out of the branches. We still have lots of transactions that are happening in the branches because one day we dream of a branch that is totally unmanned, that runs 24/7, where people just walk in to do everything that they need without the assistance or without any human intervention. We will get to that stage. So at the moment we are analyzing the sort of transactions that are still going through the branches and continuously educating our customers on the available channels that they can use instead of visiting the branches. The branches, by the way, are very expensive for our customers. So we are trying to move them to channels that are not only convenient from availability perspective, but even from a cost perspective.
Do stay with us. There's more to come regarding the FNB results announcement after the break.
What is the future of help? It's to help people find the great in themselves. The drive, the passion. Help them find their true potential. Help them stretch. Help them grow. That's why we help people help themselves, help the world, because a little help goes a long, long way. FNB, how can we help you?
Fully automated bank. I think you're now touching on an area that draws quite a bit of trepidation. People feeling that automation may replace jobs, much needed jobs in Botswana. Are we not putting efficiency over present and important needs?
That is very true. We know that studies have been done in the past that indicate the impact of innovation, that indicate the impact of automation and robotics, or the fourth industrial revolution as they call it, the impact of the fourth industrial revolution on employment. There will be challenges, there will be hard times, but there will also be opportunities created when we start doing the automation and all these robotics. And I usually advise young people that there are lots of opportunities that they need to embrace, which will come as a result of this journey towards the fourth industrial revolution.
Along with the numbers that were presented today at the results announcements were some interesting developments with regards to product offerings. Could you please expand and share what some of those are?
At the heart of everything that we do is the customer. So it doesn't matter which pillar you look at, each one of those pillars is addressing a customer need. So yes, we have launched a number of products in the past, which we have shared with our customers. We have gone into partnerships with a number of players in the market, including Water Utilities Corporation, including other partners that enable customers to get products from those players and pay using the FNB platforms. The latest one that we were sharing today is the partnership with Botswana Gas that enables you to buy your products from this particular supplier and using the FNB *174 hash, pay for the product that you would have chosen and have it delivered to your house. So there are a number of those that we will be going to market with that we've been launching.
One of the more notable product offerings mentioned at the FNB half-year financial results announcement on Thursday were cash at till and retrenchment insurance. Cash at till alone has added 242 points for FNB customers to access cash to the already 217 existing ATMs across the country, with hundreds more to come as retail partners, the likes of Choppies, SuperSave, Spar, Sefalana and others, help to increase the bank's footprint. Stephen Bogatsu explains how this works.
The cash at till enables customers to cash their e-wallets, to cash at tills where we do not have ATMs. So it enables us to penetrate areas very far from where we have branches and ATMs. It's part of the inclusion, financial inclusion journey that we also started. It has been very well received by most of our customers as well as participating merchants because it enables facilities and areas where we do not have any representation. So that has become a very popular product with many of our customers and, as I said, with our merchants. Then yes, there is the mortgage protection, which we also launched. It's actually called retrenchment insurance, which is a first in the market as far as we know. The available product was actually covering up to about 6 months after your retrenchment. This particular one covers your installment for up to 18 months while you're looking for a job in order to ensure that your installments or your financial obligations do not get impacted by any loss of job.
What is the future of help? It's to help people find the great in themselves. The drive, the passion. Help them find their true potential. Help them stretch. Help them grow. That's why we help people help themselves, help the world, because a little help goes a long, long way. FNB, how can we help you?
Welcome back to First Issues as we continue to look at key highlights from FNB's recent half-year financial results announcement. Joining the conversation is Chief Financial Officer at FNB Botswana, Luke Woodford, who shares the highlights and lowlights of the 6 months ended December 2018.
We've seen a moderate growth in our balance sheet. We've managed to fund it well with our deposit growth, but we've seen limited opportunities to lend money into the asset base based on our risk appetite. So we've really tempered our growth into retail lending. That saw a 4% increase. We've seen some great projects coming through in our corporate space where we've seen close to a 40% growth though. So we've had a temperate growth overall in our balance sheet and well funded. On an income statement side, we've seen overall profit after tax increasing by 9%. That's taking a few factors into account. Really, it's a story of non-interest revenue increasing by 10%, offset by increase in impairments and a flat-ish environment with regards to interest income, and that's on the back of operating expense growth of 3%. So there's a lot of numbers mixed in there, so let me just unpack it a bit. The non-interest revenue growth of 10%, that's really speaking to where we've had significant growth in the number of customers and the number of transactions customers are doing. In addition to that, we've also seen very good growth coming into our foreign exchange revenue. And all of this, so when we post a 10% growth there, it pleases me to state that it's not on the back of charging individual customers more. So really our fee increases have been inflationary, and then the success has come off of more people wanting to bank with us. Then the operating expenses, it talks to our digital story, where we've got the bricks to clicks and the cost of cash coming down, cash transactions generally reducing, as well as just efficiencies that we've brought into the bank. The interest income space has grown by 4%, and that's been offset by an increase in impairments. That's where we've seen a bit of stress coming into the portfolio with our non-performing loan ratio. So it's non-performing loans divided by average advances or closing advances, and that's increased from 6.6% to 7.6% year on year.
Cost to income ratio, there was a marked jump from the 30% to 48 to even 50%. What is that attributed to?
It's been over probably a 5-year journey that we've seen. A few years ago, we really were sitting in the mid to high 30s in the cost income ratio. There's two main factors to that. The one was that we have looked to, or in fact, the past few years, we've really increased our investment. So we've rolled out, in the last year, we've rolled out 1,000 new point of sale devices as part of the electronic banking. We've revamped branches, we've put down further branches, we've invested essentially in our bank. So at the 35% odd that you would see in the past was on the back of probably a lower investment cycle. In addition to that, we've seen interest rates in the market come down. Now, for a bank when interest rates come down, you see your margins being compressed quite significantly. So it's a cost to income is the cost divided by the income. So it's really a numerator and denominator squeeze that's caused this.
When speaking to Steve about the bricks to clicks strategy, he mentioned how it is in the best interest for consumers to use less cash and to use more electronic platforms because cash is a little more risky. What is the thinking behind that?
I mean, cash in your pocket is a risk because there's no verification. So it's like walking around with a cell phone without a passcode on it, which I don't think anyone would do nowadays. So first of all, there is a risk to the consumer in having cash in their pocket. The same thing applies to the corporate taking in the cash. The cash in the till stands as a risk of robbery or fraud. So the electronic transactions are, for me, a lot less risky, but for me, there's also a very good cost component to that. So the idea of whenever cash changes hands, there's a cost of actually physically moving the cash, insuring the cash and the likes, whereas electronic transactions are scalable without additional or very, very marginal additional costs going into it. So to set up a bank that does 1,000 transactions or does 1 million transactions, it might be a very similar cost, in fact. Especially if most of it is electronic based.
And finally, along with the announcement was the announcement of an increase in dividends to your shareholders. What can we expect there? We hear it's a temporary increase. Please unpack or
Sure.
expand on that for us.
So for the last few years, we've kept the interim dividend at 5 thebe per share. We have seen a growing gap between the interim dividend and the final dividend. And what we've done in this period is we've started to reduce that gap. So it really isn't an indication of what will happen at year end, at the final dividend, but it's just to say that we can close the gap a little bit and distribute to our shareholders earlier.
Another interesting announcement made at the FNB half-year results presentation was that of a commitment to finance some of the infrastructure projects that government has chosen to prioritize this financial year. Some in attendance questioned whether the bank had taken the risks associated with local infrastructure projects into consideration when selecting this focus. Ulibile Makupe, head of FNBB Botswana, elaborates.
If you were to look at NDP 11, government has actually highlighted a number of areas where they expect growth to come from, mostly around infrastructure, around electricity as well as water infrastructure projects, as well as construction of projects such as road projects. So as a bank, we would like to be very active in funding those projects. We have the capacity as well as the balance sheet to assist in the execution of those projects, both for government as well as the private sector. The benefit of working with an established and experienced institution such as Rand Merchant Bank in financing those projects is that as the project owner, you get the benefit of proper monitoring from initial inception, appointment of the contractor, as well as monitoring of the project timelines and milestones throughout. Because as an interested party, having provided the funding, we want to see the project come into conclusion. So we work with a team of engineers from within our division who work with the contractor to ensure that projects are executed within timelines. We have a strong history of financing large infrastructure projects, both in Botswana as well as across the continent, working with an experienced team that I alluded to earlier of engineers who are based in South Africa. So we have a history of completing projects on time, and as a project owner, it is in your interest to work with a financial institution who are also invested in the project to make sure that it's completed on time, and that's where we come in. We are very keen to see government executing the PPP vision, and we have participated in all the initiatives that government has actually embarked on around PPPs. So we look towards that with a lot of anticipation. We would really like to participate in the execution of those PPP projects.
That brings us to the end of our program. I trust FNB has once again reminded us of the importance of sound strategy and innovation, staying ahead of the curve. With that, I, Namezo Semakula, and the team behind First Issues wish you good night till next Tuesday evening.
This program was brought to you by First National Bank of Botswana.
FNB, how can we help you?